Man, it was a tough year.
Yes.
For certain. So, who rose above the havoc
Right.
to do okay?
Well, our number one finisher this year was Marshall Wace. They're a London-based hedge fund firm, less well known outside the U.S., although KKR did take a large stake in them last year. They had very strong performance in both their European equity and their market neutral fund last year, so that helped them for sure.
I was going to ask you whether there would be a direct correlation between fund performance and then grade that the investors give, which you would think that that would be the case, but counterintuitively it's not, in the fact that I'm told that Pershing, at least last year, got an A.
Yes, they did.
And coming off the firm's worst performance in history.
Right. So I think what's happening there is that investors are giving them a little bit of the benefit of the doubt based on their 2014 performance, which was when they were up
Knocked
about
it out of the park.
40%. Right. And they also scored well on other factors, non-performance related factors, particularly transparency. It's hard not to know what Ackman is thinking. So investors rated them highly on that, and a couple of other factors. So performance alone, not enough to guarantee great performance. And if you have bad performance but you do well in other factors, you can still do reasonably well, at least for a year. We'll see how next year goes.
So if we know you're not doing so well, we can live with part of the fact that you're not doing so well.
For a time, I mean, investors are not known for endless patience when it comes to bad performance. So again, if Ackman's year continues to go as it has been,
do you think this is bad performance or volatility unto itself? Which is to say, if you look at Bill's performance, he is a very up and down. You know, he's swinging for the fences always.
Right.
And are there certain investors that at some point to say I can't do it anymore?
Well, I think, with someone like Ackman and other managers on the list, investors kind of know what they're getting into with the volatility. So again, if you're longer term, you can live with that up to a point. But again, if you have multiple years in a row of this kind of performance, then it's gonna be reflected in both your results and also investors voting with their feet.
David Einhorn of Greenlight was rated in the bottom 4.
Right.
His performance last year, like Pershing's, was not good. Why the disparity in the rankings?
Well, a couple of things with Greenlight. One is that you may recall they opened their main fund in December 2014 to new investment for the first time in a long time. And so investors who got in December 2014 got in just in time for the start of the slide. So those voters may have been counted in this year's report card. The other thing is that Greenlight has something called a modified high water mark, which means that they actually can charge fees even in years where they have losses. I think they charge something like a 10% fee until investors recoup 150% of their losses.
And that's fundamentally different than the way the other funds operate?
Right. That's fairly unusual, yes. So not something investors typically are crazy about, paying fees on losses.
Other names on the list that we should get to. You mentioned Citadel as being towards the top, Perry Capital. What's interesting is many of the top performing firms are ones that we generally don't hear of all that often, or certainly aren't one of the ones that you would say are the more high profile. Adage Capital Management is out of Boston. The Children's Investment Fund Management is out of the UK. Two Sigma is a New York firm from two D.E. Shaw alums.
Right. Well, Adage, interestingly enough, they're very secretive. In fact, one of the few bad grades they got was for transparency. But they consistently rank near the top of the hedge fund report card every year, and that's because they have among the most favorable fee terms in the industry. They charge much lower than industry standard fees. They don't charge fees until they meet a hurdle, and interestingly, they actually have something like a money-back guarantee. Not quite a guarantee, but in which they will repay fees if they have a losing year following a winning year. So that's practically unheard of in the hedge fund industry, and the investors really like it, and that's why they do so well every year.